Tesla's market capitalization is ridiculously overvalued today and has been for a good long time. For years, Tesla was valued as an automotive growth story. As vehicle deliveries growth stopped in 2024 and reversed in 2025, the narrative shifted heavily towards Cybercab and Optimus. Burry characterizes this shifting focus as a way to keep the cult invested. Hi everyone, JJ here. Welcome back to the Johnston Lounge. Well, today we've got news of big short investor Michael Burry, who's saying that Tesla stock is ridiculously overvalued, among other things that he said. I think this deserves a whole episode about this. I don't talk about investing that much really these days. I have covered Michael Burry in the past quite a lot, but this is significant as it's to do with Tesla. I mean, I've even been doing fewer stories about Tesla and Elon Musk, but frankly, lately it seems to be ramping up again, the news, and this is significant, I think. The story here, as you can see, if you're watching this and not listening, the headline from Reuters is Big Short Investor Burry Targets Tesla after slamming AI valuations. So just a couple of weeks ago, he talked about two companies, NVIDIA and Palantir, that he's shorting. Now he's talking about Tesla again. It's not the first time he's talked about it or shorted it, and we'll get into that during the story. Let's see what Reuters says here. The big short investor Michael Burry took aim at electric automaker Tesla. Well, it's a tech company, not just a car company, of course, as many Tesla evangelical investors would say. So in a blog post, he said Elon Musk-led company is ridiculously overvalued, days after he voiced concerns about the current AI boom. Burry estimated that Tesla dilutes its shareholders at about 3.6% per year with no buybacks, and Musk's record-breaking pay package will continue the dilution. So he is pointing this out. There's pretty high dilution. It doesn't seem high, but if you do it every year, that compounds a lot. And, you know, he is talking about the pay package, the $1 trillion pay package. Now, I've seen headlines saying that he's being paid $1 trillion. It's not the case unless he hits the milestone set out in that. And there are sort of loopholes to that, I think, having read it. But that is the case. He doesn't just get $1 trillion. He has to hit milestones. But he'll be pulling out all the hype and all of the tricks to get there, I'm sure, to get to that $1 trillion. But Michael Burry's calling Tesla out. And as I said, it's not the first time, which we will go into for sure. And if you're not sure who Michael Burry is, we'll get into that a little bit too. And the Tesla stock price. I have to say, this is not investment advice. And part of the reason that I don't do a lot of investing stories directly about stock prices is because I am not qualified to give investment advice. This is not investment advice. But you'll see a lot of Tesla influencers, the evangelicals, the Tesla channels, the Tesla pods, people on X. They really do give financial advice, pumping up Tesla and saying, you know, it's going to be the best stock over the next 10 years, blah, blah, blah. And then they say not financial advice, or even NFA in the case of Farzad. Here's my financial advice. Not financial advice, they say, which is just ridiculous. But at the moment, the SEC is really missing in action. Anyway, I digress. So they say Tesla's market capitalization is ridiculously overvalued today and has been for a good long time. Burry wrote in his Substack newsletter, Casandra Unchained, on Sunday. And this is that newsletter. It's a paid newsletter. It's not cheap. Obviously, he's aiming at Wall Street professionals, investors who want to follow along. And he is talking about the AI bubble. He has been talking a lot about that. And now he's included Tesla in this, really. Tesla's stock traded around 209 times its forward earnings as of last close, well above its own 5-year average of 94. If you're not familiar with investing, I'll try and explain as we go along, but that is 209 times forward earnings is really high. Just put a pin in that, and it's higher than it has been, even though it was high at 94. And this has not shown much growth, this company, in the past few years. That's a key point because it allows for some give if it's a high growth company to have these high metrics, but it's at the moment not a growth company. But the Tesla investors, the Elon Jellicles, will say that growth is coming because we've got robots and we've got AI, which Burry does talk about. He addresses that. So the S&P 500, meanwhile, trades at around 22 times its forward earnings. So 22 times forward earnings, I mean, that's relatively high in history. And we do have those magnificent 7 stocks, including Tesla, that trade higher than that. So it's kind of elevated in relation to history at the moment anyway. The bearish view against Tesla is not Burry's first, they point out. His asset management fund closed a large bearish bet via options on Tesla in May 2021. He later told CNBC in October 2021 that he was no longer betting against the company and that his position was just a trade. So he did talk about this on X. Was it Twitter at the time? Was that before Elon bought it? Anyway, he was pretty loud about that. And you could say that he was wrong on that, but he was actually generally right, just wrong on the timing there. And that's the problem with shorting. It's very risky because you can lose a lot of money just by being right, but the timing being wrong. So we can see here on this chart, this is 2021 here, and it took a big spike, and Burry was concerned about the stock back then, shorting it, but it wasn't actually till the end of that year, closer to the end, November 1st, 2021, and then it did start going down. If we go and look at how much it went down from there was quite a tech crash there, and it went down over 70%. So he was correct on that. He just pulled out of that trade too early. And that's what can happen with shorting. That's why it's so dangerous. And we can see here a lot of the ramp up of the stock came from 2019 during 2020, 2021, then went down. And then we see towards the end of 2022, when ChatGPT kicked off, and that's where the AI boom started, arguably a bubble, I think it is, and that's where it's at today. So that's the story of Michael Burry's shorting and what he thinks about it, and in relation to the stock. Recently, Burry has stepped up criticism of technology heavyweights such as Nvidia and Palantir Technologies, questioning the cloud infrastructure boom and accusing major providers of using aggressive accounting to inflate profits from their massive hardware investments. So he really has been looking at this AI situation and has decided that Tesla is involved in this too. Now we can see this from 2021. This is not the new one. Burry of Big Short fame reveals $530 million bet against Tesla. So these are not small positions. He is a big investor. He doesn't have a fund anymore, so he's just doing it privately, which is why he wants to do this blog, I think. And this is the story from October 15, 2021. Big Short investor Burry says he's no longer betting against Tesla. And this is a recent one. Palantir's bull run stalls as Burry bets against AI darling. That did not help the market. This is how much influence Burry sometimes has. It also has very high metrics. And this one, Big Short investor Burry targets AI boom with new blog after hedge fund close. Burry says he's not retired and the blog has his full attention. So expect more news from Burry as this plays out. He warns AI spending could surge over the next 3 years and likens Nvidia to Cisco during the dot-com bubble. So if you look at what happened to Cisco, if you're not familiar, it was the darling back then, laying out the infrastructure for the internet as we know it. So this AI bubble is the next phase, really, 25 years later. So this is the story from Electric, The Angle, The Big Short. Michael Burry slams Tesla valuation, warns of ridiculous dilution. And they say Burry became famous for being one of the first to recognize the impending US subprime crisis and for betting against it, which a lot of people don't like, really betting on people's misery. Earlier this year, Burry shut down his hedge fund and returned money to investors. freeing him to discuss the AI bubble publicly. He recently launched a new Substack and quickly became one of the main thought leaders breaking down the anatomy of the AI bubble. So, this isn't actually too unusual, shutting down a fund. Even Warren Buffett did this in his early days, returning money to investors. If he can see that the investors won't go along with him, and in times of bubble, value investors, and he's a deep value investor, a lot of investors do get carried with the bubble and are really not keen on going with value investors, waiting for things to go down and crash rather than going with the momentum in the last stages of the bubble. And I'm not saying we're in the last stages of the bubble, but I do think there is one. Barry has had a tumultuous relationship with Tesla stock over the years, famously holding a massive short position against the automaker in 2021, which we've had a look at during that time, before eventually closing it. While he has been quiet on Tesla for a while, his latest newsletter focuses on how tech companies use stock based compensation to obscure the real costs. Now, this has been a criticism of tech companies in particular for quite a long time, having big stock based compensation for those involved, for staff. I mean, nobody would begrudge staff having stock in the company itself, but often they do that to quite an extreme. And Warren Buffett, again, he's a big fan of buying back stock when it goes low, when he sees it being trading below intrinsic value. So Berkshire Hathaway, his company's done that for a long time. So growth tech companies are not in the business of doing that. I think Nvidia has been, and it's questionable whether they should have been doing that at the prices that the stock's been in the market. While the bulk of Burry's analysis targets Nvidia, his main target in the AI bubble, he dedicates a specific section to Tesla, and the math he presents is worth looking at for shareholders. And you might be a shareholder. I've seen a lot of people on X, the all-in people on Tesla, really railing against Burry and just not really listening to anything he says, but it's still worth listening to what he's saying. I mean, he can't be dismissed given the success that he's had in the past, but he has been wrong. Every investor is wrong along the way. That's just part of the game. So Barry's article is talking about the tragic algebra of dilution. Barry's main argument is that Wall Street and investors generally ignore stock based compensation when calculating earnings, treating it as a non cash expense. He argues this is a mistake because it permanently dilutes existing shareholders. Along with one of his associates, Barry has developed a formula that calculates the real dilution from stock options for companies. He singles out Tesla as a prime offender when it comes to diluting its shareholders without offering buybacks to offset it. And a lot of the Tesla investors, retail investors, don't care about dilution. They just don't think it's an issue because Tesla's just going to be a massive market cap in the future and Elon's just going to ramp it up. So just dilution won't really matter in the long run. Tesla dilutes its shareholders at about 3.6% a year, as we saw, with no buybacks. For context, Burry compares this to Amazon, which dilutes at 1.3%, and Palantir, which is higher at 4.6%. Remembering that he does have a short on Palantir as well. And Alex Carr kind of lost it, crashed out about that. He just does not like short sellers. The concern here is that while Tesla reports profitability, well, only just, I think, in the last quarter, a significant portion of the value created is being transferred directly to employees and management in the form of new shares rather than retained by the current equity shareholders. So when there are buybacks, that cuts down the amount of stock, the amount of shares. So the existing shareholders should get a boost from that over time. If a company keeps buying back at an opportune price, like Alibaba has been doing. Their price has been so low for a long time, it just really cratered. And they got busy buying back shares at those low prices. But Nvidia's been buying them back at quite high prices. That's, I guess you could say it's a vote of confidence for the future. But it's generally not prudent to buy back at expensive prices because you're just kind of throwing money away. The Musk pay package. We reported extensively on Elon Musk's massive compensation package after a judge rescinded his original massive $55 billion package. Shareholders voted to reinstate it, and it is now up to the Delaware Supreme Court to decide whether Tesla can still use it or if it must fall back on a new $29 billion package it already pre approved. On top of this already absurd situation, shareholders recently approved a new stock option package for Musk up to $1 trillion, which is obviously a record in the market and for companies, for US companies or companies anywhere. But he doesn't get that unless he hits those benchmarks, of course. And you'll see that he does really step on the accelerator in terms of hype to help things moving along, at least the perception that a lot is happening, that it's going to happen soon, and they're going to ramp up revenue, ramp up profit. When in actual fact, their revenues have just really just leveled off over the past few years. Now, Burry sees this package not as a reward for performance, but as a guarantee of future value destruction for current holders. With recent news of Elon Musk's $1 trillion pay package, dilution is certain to continue, Burry writes. Tesla's market capitalization is ridiculously overvalued today and has been for a good long time. That's right, he's been saying it's been overvalued for years. Others have been saying it's been overvalued for years, and these things can go on. Like when a bubble develops in particular, these things can go on for years and people can laugh and say, you were wrong, you were wrong. It can play out much longer than people expected, and obviously longer than Burry expected, although it did have that 70% drawdown, but it's gone back up because of the AI boom. The issuance of those shares creates a massive overhang on the existing float on top of a stock that already trades at almost 300 times earnings. Now, this is interesting, and this is something that I've talked about, the Elon cult and the pivot to robots. I've talked about this quite a lot lately. Elon's promises or claims, not promises, but claims about the future of the humanoid robots. Some of it's pretty ridiculous, I could say that, and pretty extreme. Perhaps the most biting comment in Burry's note is regarding the shifting narrative around Tesla. For years, Tesla was valued as an automotive growth story. As vehicle deliveries growth stopped in 2024 and reversed in 2025, the narrative shifted heavily towards Cybercab and Optimus. Burry characterizes this shifting focus as a way to keep the cult invested. Yes, he did pivot away into AI as the AI bubble took off when it was pretty opportune because the car sales were going down. Remember, he got into politics as well, arguably to help with regulation for his own companies. Arguable, I say, because he doesn't say that, but it seemed pretty obvious. At one point, he said, I'm going to prison unless Trump gets in. He was joking about that, but was it a joke? As an aside, the Elon cult was all in on electric cars until competition showed up, and then all in on autonomous driving until competition showed up, and now is all in on robots until competition shows up. When Tesla first started the electric cars, to Elon's credit, he did scale EVs globally, really, but competition did arrive. So Tesla investors were laughing, when's the competition coming? That was a running joke. Where's the competition? The competition's coming, ha ha ha. But then the competition did arrive, especially from companies like BYD, Chinese companies who not only match Tesla in China, and you could say, favorable conditions there with the Chinese government favoring Chinese companies, just as the US government favors US companies, right? But BYD is now exporting to different countries, Australia and New Zealand and Europe. Elon doesn't even talk about it, but it's a real thing. And especially in Europe, where Tesla's numbers have been going way down, which I've been covering. While some could argue that these moves were made as Tesla took advantage of new technologies, the timeline Burry is highlighting is technically correct. Now, Electric's final take, and this is Fred Lambert from Electric. I have a lot of respect for Burry, he says. As do I. I mean, as I said, he has to be taken seriously given what happened during the global financial crisis or leading up to that. He was right about that. He's known for being pretty forensic about his analysis and research. His arguments are sound and well researched, Fred says. I have been enjoying the Substack over the last few weeks, and he makes some undeniably great points about the AI bubble. That said, it doesn't necessarily make any of it a good short. As I said, shorting is notoriously difficult. I think really only a few experts in the world can do it successfully, constantly, over time. There have been short funds that have gone out of business and some famous short investors who have made mistakes on the timing. Even if a company is a fraud, sometimes it can hold up for way longer than you think. There are plenty of stories about that. But there are also massive companies that have collapsed, like Enron, with the massive fraud they had. But it was seriously one of the most exciting and popular companies and one of the biggest in America. So these things can happen. I'm not saying that's going to happen to Tesla. It's not financial advice, but it's interesting all the same. So now I'd love to know what you think about this. Do you think that Barry has a point here? He has talked about this for a long time. As I said, he got it wrong, the timing wrong. It did go down 70%, so he was right there. And now it's shot back up again. Are we in a bubble situation, an AI bubble situation? And is Tesla being carried along by that? Is there dilution, something to be concerned about, as Barry said? Now, I'll be following this as we go along because I think that he has to be taken seriously, and I am keen to see how all this plays out. It's been years. I think people at this point don't think that Tesla could really collapse, and a lot of those retail investors who are all in just think that you just buy the dip. And I think something really significant would have to happen, quite frankly, like the AI bubble bursting. And then I think it would be interesting to see what happens with Tesla. But as I said, not financial advice. I'm not predicting anything or when or why or how, but I will be following along with this. And right now, I'm going to put a related video on screen on YouTube. Do go and see that now if you want to. And on Spotify, there's related links in the show notes and on YouTube. The two places where you see videos, YouTube and Spotify, if you didn't know that. And I'm going to put a subscribe link on the YouTube screen. Do subscribe if you're not yet. And follow us over on Spotify too. If you're over there, you can pick and choose where to watch this. Thanks for watching this one, and I'll see you in the next one.